There are three fundamental things that human beings have that concern finance and money, and sort of outside that. Human beings have a hard time dealing with exponential growth. Human beings also have a very hard time dealing with time. But for this conversation, human beings have a hard time with large numbers. The United States government owes $34 trillion to the world. 20 years ago, that number was 5 trillion. So what does one trillion look like? Try to take in your mind and figure out, if you had single dollar bills, how big would that pile be if it was $1 trillion? Would it be as big as a room? A house? Would it be as big as a truck? Humans can't conceive something like that. But to give you some idea, $1 trillion is 10 to the 12th power. If you piled up single dollar bills from the earth, you probably almost get to the moon, piling up single dollar bills. No human mind can understand the scope and size of $1 trillion, yet we are talking about $34 trillion. The general update. The gross domestic product closed at 3.3, which is up from December of last year. The PCE, which is a factor used to measure inflation, was up 2.6 from 2.3. And the CPI, which is another factor that measures inflation, but entails more than CPE, was 2.7. That was up 0.3%. Things are getting better, except there's some things that stick out, like the yield curve inversion. A yield curve inversion, pretty much, to put it in simplistic terms, is if someone has a choice of tying their money up for 2 years or tying up their money for 10 years, typically you get more money in interest if you say you're going to leave your money for 10 years. And you get less if you're going to leave it 2 years. Your risk is higher because there's 8 additional years something can happen. A yield curve inversion is when people believe I have a better chance of making more money in the short term than the long term. So then the rate of a 2-year Treasury note will be higher than 10 years. That's totally out of line. It affects all types of loans, mortgages, and everything. So this is a yield curve inversion going on right now. It's been going on for 2 years. That's a major problem. The EU has put a hold on its rates, and China has become the largest automaker in the world, surpassing Japan. JP Morgan, along with BlackRock, are beginning to set up a bank to rebuild even Gaza and Ukraine. The beige book, that is a tool that the Fed uses to measure at all its 12 regional banks, say that there is out of the 12 banks, 4 of the banks feel that there's going to be a modest set of growth this year. 4 banks said there will be a decline in growth, and 4 of the 12 Fed banks from the beige sheet say there'll be no change. The big meeting in Davos happened last week. The issues were climate change, AI, energy, war, and economics. The Fed funds rate is important because everything comes off the Fed funds rate as far as interest rates for automobiles and car loans. The Fed's fund rate is the rate the banks lend each other. It's the bank's rate to their best customer, which is another bank. That is at 5.5. The prime rate is the bank interest that the bank will charge to its best customer. And that's at 8.5. So there's 3 points difference, with 300 basis points difference between the two. And that seems to be coming down, which is really good. The government still is frozen with its budget, and it's still experiencing its continuing resolution. President Biden has called for ending all ICE engines by the year 2030. Microsoft was recently hacked by Russian cyber spies. The Houthis are continuing to attack in the Red Sea. That could have tremendous impact on oil prices and anything coming through there. The Conference Board, which is a think tank in New York City, says that the inflation rate year to date was 5.2%. And basically, a small amount of consumers, the Conference Board says, less than 25%, feel that we're in good condition. The lion's share of people feel that we're in bad condition, or according to the Conference Board, or conditions are okay. The New York City pension funds, I hear, are being attached to ESG requirements. Reddix is going public. They're going to file probably an IPO in the New York Stock Exchange. Apple had a fantastic quarter, $89 billion. The major tech companies are all talking about laying off people. And a lot of this is not even AI related. The sad thing is the government, we talk about the unemployment rate being low and jobs being created. A good lion's share of jobs are government jobs. And government jobs, although they're extremely important, they don't generate any income. So I don't know how important that is by saying that municipalities and government are hiring people. I don't know how good that really is. Relating to jobs, the expected increase in jobs last month was, they expected 185,000 jobs. They almost got twice as much. They got 353,000 jobs. But you gotta remember how the U.S. government calculates jobs. They don't calculate jobs by individuals. If an individual has 3 jobs, one person, as far as the government's concerned, that's 3 jobs. So if you have to go out and find another job to feed your family, they're calling that another job. Larry Summers, the former Treasury Secretary, says the goal inflation, 2%, is going to be tough. China is still offline. We're waiting for China to come back online. President Biden has decided to cut off liquefied natural gas exports. Amazon, UPS, Xerox, Wayfair, all announcing layoffs. Millennials, this is one thing that people don't understand. I think being that most of the people in the working force today have never experienced inflation. They don't know what the inflation was like in the 70s. So I think what people are expecting is deflation. In other words, they're expecting $1.95 gas. I don't think that's going to happen. That doesn't happen in inflation. The other piece that I see this time inflation that I did not see in the 70s was shrinkflation. I mean, now you're getting a lot less. Think about a can of soda. What a can of soda looked like 3 years ago and what it looks like today. So that's even part of inflation. If you enjoyed the video, please give me a thumbs up and give me a like and subscribe and have a great day. Bye.